Hey everybody, my name's Corey, aka C Money, and today I'm telling you how my wife and I are paying off both of our cars within about 8 months. What we did, we took a HELOC out of our home equity. It's a line of credit basically at 8% roughly. And you're thinking 8%, that's high. It's not high, it's a simple interest. And so you pay the average daily interest of what you owe. And so if you use a concept that we're using called velocity banking, and I would highly recommend watching Fantastic Finance's YouTube channel, Christy Van. That's how I discovered this concept. But if you use velocity banking and you mix that into something like a HELOC, you can pay down your debt pretty dang fast. This works the best if you already have some cash flow to your monthly income, which thankfully my wife and I do. I work 3 jobs. My wife works 1 job right now. So we have 4 jobs between the two of us. We have 2 little kids at home. And so it's a lot to manage. Thankfully, we have some cash flow. It works with no cash flow too, but it's faster if you have some cash flow to start with. And so what you do is you transfer what you owe on your car. You pay your car off with your HELOC, your line of credit, or you can get a PLOC, a personal line of credit. Either one will work. We did the HELOC because we have a home and we have equity in it. So we transferred what we owe on my wife's car to the HELOC, and then we're paying all of the extra cash flow that we have as our monthly payment, which is like a couple $1,000s a month. Now, not everybody has that, but this is the thing. If you velocity bank, you can throw your entire paycheck, right? Your entire income that you get as a payment into your line of credit each month. And you're thinking, well, then I don't have any money left. No, you have that payment that's been satisfied because you just put your whole paycheck in there as a payment, right? But then what happens is it's a revolving line of credit. It works like a credit card. You can take money back out for what you need. And so each month you live off this line of credit and you pull back what you need for your expenses. So to pay your house payment, to pay groceries, to buy gas, whatever you need to do, right? And so essentially what you're doing is you're freeing up the car payment that you had. I think her car payment was like $500 a month. We freed that $500 up a month, and that went into our cash flow, and we live off the line of credit. And you're thinking, that's kind of crazy. It's not. It's a simple interest. Her car is going to be paid off in 6 months. And then what am I going to do? I'm going to turn around, redraw the HELOC, and pay my car off, and it'll take about 4 months to pay my car off. I didn't believe this at first. This is legit, not a scam. Go check out Fantastic Finance's Velocity Banking. Some people velocity bank using a credit card. We do that with our utilities. It's a little more dangerous because, of course, credit cards have like 30% interest rates, and you can kind of get caught with that, especially if you can't control your spending. But if you can put yourself on a budget and have time, right? Because I think our HELOC's like 10 years to pay it off and a 3-year draw period. I don't need those 10 years to pay it off, but if an emergency comes up, I have time. The minimum payment's $200 a month, right? So I have time. And you might say, well, what happens if something happens to you? You're going to leave, your family with this HELOC to pay off? They were going to have to pay off the car anyway. So I transferred the debt from the car to the HELOC and did the math, guys. It's going to be paid off in about 6 months, and then my car in about 3 or 4 months. Both of our vehicles are going to be paid off by the end of 2025 if we stick to our plan. Crazy.